So earlier this year, I re-listened to the audiobook, The Millionaire Next Door, and I was reminded of how important the concept is of tracking your net worth as a measure of your wealth instead of just focusing on your income level. And then I got to thinking, wait a minute, how many people are actually tracking their net worth or using a personal balance sheet? And I couldn't even find that statistic, but I did find that only 41% of Americans actually use a budget, according to a report released by US Bank. Of course, a budget is great, but it's not going to tell you what your net worth is, which is one of the most important metrics of building and tracking your wealth. So then it got me thinking, how can I make it easier for you guys to track your net worth? Because I'm sure there are plenty of you who would love to be the next millionaire next door, and maybe you're not even sure it's possible. But if there's one key takeaway from this book, it's that millionaire status is not the same as high income. And just because you have a high income, it doesn't guarantee that you'll become a millionaire down the road. It happens because people are aware of ways to improve their net worth, which is tracked on the personal balance sheet. So in today's video, we're going to look at a personal balance sheet. I'm going to explain it in simple terms, what it all means, and I'll give you access to download the very balance sheet we're using in this video so you can create your own personal balance sheet and hopefully become that next millionaire next door. And if you're new to the channel, welcome. I'm Tim, and on this channel, I help physical therapists and other healthcare professionals improve their financial health. But the reality is that the concept of a balance sheet is so universal that everyone can really benefit from understanding the basics of it and how it works. Now, in the simplest of definitions, the balance sheet is a snapshot of your financial position, where you are financially at any given moment. Imagine looking at your bank account on your phone at any given time and you look up your balance. That's a quick snapshot, and it's a part of the balance sheet equation. You see, the basic equation of a balance sheet is this: your assets equal your liabilities plus your owner's equity. At least that's how you'll see it when you're looking at a business balance sheet. But when we create a personal balance sheet, we do a quick rearrangement that tells us a really important story, whether or not we have a positive or negative net worth. And for most people starting out their careers after college, there's a high chance that you'll have a negative net worth. And that's because if you have a high amount of student loans, like most physical therapists and physicians do when they graduate, the liability or the things that you owe significantly outweighs the assets or the things that you own. And when you subtract the things that you owe from the things that you own, it gives you a value that we call net worth. And calculating your net worth using a balance sheet should be done at least once a year, and it's a really important metric to track if you're trying to improve your financial health. I suppose it's kind of like going to the doctor every year and having your blood work ordered through your annual checkup just to make sure everything is normal. But in this case, we just need a spreadsheet or a calculator, and you can do it from the comfort of your own home without any needles. Don't use needles. Unless you're using it to smash the like button or to inject this video with a like, then I suppose it's okay. So let's take a look to see here what's included in the balance sheet, and we'll start by taking a look at your assets. Now, the assets are usually presented here on the left side of a balance sheet, which is sometimes called your statement of financial position. You might see that. And you'll notice that here all assets are not created equal. And the way you want to list your assets here is in order of liquidity. How easy is it to access the value of that asset? Now, the first group of assets you'll want to list here is called cash and cash equivalents. These are your low-risk accounts that can really be quickly redeemed for cash, like your checking account or your savings account, money market accounts, and short-term CDs at a bank. This is also where your emergency fund is going to live because you may need to have access to those funds very quickly. Other assets that you have invested will fit into the second category called invested assets. Now, these invested assets include anything that you own in stocks, bonds, mutual funds, retirement accounts like your 401k or your IRA, and even long-term CDs. And just like any of the accounts listed here, it's important just to list the value of the account on the day that you update your personal balance sheet. Remember, this is a snapshot in time, so your balances are going to change constantly, but the point here is to give you a big picture idea of your overall financial health. And finally, the third category of assets to include in this list are your personal use assets. Now, these are things that you own, such as your home, your car, your valuable possessions like jewelry or musical instruments. And when you're listing your home or your car, the value that you assign to these items are equal to the market value of that item if you were to sell it today. So if your home has a fair market value of $200,000, then you would list it as such. And if your car has a Kelley Blue Book of about $8,000, then list it at that amount, not the amount that you owe on the car. Again, this category is to list all the things that have value, but since they're on the bottom of the list, they're definitely not as liquid or accessible as the cash that you've listed on the top of this column. Now, at the bottom of the list, you'll add up all of the items under the assets categories, giving you a total number that we'll label here as total assets. We'll reference that in a minute, but that's all it takes to build the first half of our balance sheet. Now it's time to make the second part of the balance sheet, the liabilities. Hey, Hey, if you're enjoying this video so far and you want to follow along with my free financial templates, let me know in the comments if you were able to access the balance sheet that I listed in the description below. Now in the second column, we're listing our liabilities, or the things that we owe. Now you can list them here in descending order based on the account balance, or based on the order that you have to make the payments. It really doesn't matter here. Now on a company balance sheet, you'll see this column broken into two sections called current or short-term liabilities and long-term liabilities. Short-term just means anything due in less than a year, and long-term liabilities require debt payments for more than a year. But to simplify things on a personal balance sheet, we can simply list all of our debts as a liability, and you don't really need to break them down into short-term or long-term unless you really wanted to. The major liabilities you'll want to include here are your home mortgage, any auto loans you have, and if you have student loans or credit card balances, you'll add that number here as well. Then add all the liabilities together to get the figure total liabilities. And if you remember the simple equation for calculating net worth, we can take our total assets and subtract our total liabilities and see just exactly how much we're worth financially if we sold everything and paid off everyone that we owed. If you have a positive net worth, that's awesome. If you have a negative net worth, well, you're not alone, especially if you've just finished college or grad school in the past few years, but now you know where you stand financially. And as you start to eliminate your debt and then to build savings, your net worth will continue to improve, and you'll find it easier to do things like smashing the like button for the YouTube algorithm, all sorts of things like that. Again, for someone who's just finished college or grad school, it's going to be very common to have a negative net worth right now. The point is not to ignore it or to be discouraged by it. The point of creating a balance sheet is to calculate your net worth so that you can start to improve your financial health. And just like in medicine, you have to have a baseline to understand our current situation and where we need to focus our energy in treating our patients. And the same is true with our finances. You can download the financial templates to access the personal balance sheet that we referenced in this video. I'll put the link in the description below. But if you're not subscribed, you'll want to do that, because in the next video, I'll show you the second important financial statement to create, which is the statement of cash flows. I'll see you in that video.